So today we're going to talk about one of my best performing stocks in 2022. This year it has had a very good year. The fundamentals of this business have just been proving more and more, and I would actually say it's one of my top 5 best performing stocks financially this year. The only frustrating thing with this stock is that I actually wish I owned more. It's still a very large UK position, but I would have liked this to actually be my biggest UK holding. And like I was saying, fundamentally this stock has had a fantastic year. And it's been one of those stocks that it has been a little bit annoying because with everything that's been going on in the background, the share price sometimes has not reflected how good the financials have been on this business. But we'll take a look at the financials today because they did just do their full year accounts last week, and we're going to look at this business and see how well it is positioned going into 2023. Now, I did mention this stock on the UK portfolio review on the Patreon, and actually I just put my US portfolio up, so if you do want to see them exclusive videos on the Patreon, link is in the description to join. But on that UK portfolio, I was talking about this stock, Hollywood Bowl, and I was saying like it's been such a good business this year, financially performed absolutely amazing. And it's not really had the reflection on the share price. If we look year to date, the stock is basically flat on the year. And you can see here there's been points where the stock has been losing a lot of value. You know, if you look at September time, the stock was nearly down 40% in this time frame. But recently it has had a bit of a bounce up. And what I was saying on the UK portfolio review is it should be a lot fairer reflected on the share price. And within the last 5 days, you can see here out of nowhere, then it has a 20% rally, which is just absolutely crazy. So Hollywood Bowl is a stock that I've owned for around about 2 years now. I'm up on this position a fair amount. You can see here, since roughly I started buying it, it's up over 60%, but I've been averaging up on this position. So personally for me, I think I'm up about 40% on this position. And even right now, I think there's still plenty of upside and a good future in Hollywood Bowl, especially when you look at before the CV highs, this was a £3 stock. And even now we're sitting at £2.37, and this stock should be a lot higher. And that's obvious when you look at the financial performance or the position that Hollywood Bowl is in now prior to the CV situation. You know, when you look at the CV situation when the stock was roughly the same price or even higher than where it is right now, you look at the financials, they're way ahead of where they were in 2019. And if you go on the last full year accounts that they've just posted last week, you'll be able to see the progress that they have made in that time frame. Now, they did compare this to 2019, not to last year, because this is a stock that got really hurt because of the CV situation. And if you look here, for example, if you look at the total revenues, 193 million. If we actually do go off the 2021 counts, you'll see how much of a difference that was because it was 71 million. So you can see how much that CV closures really impacted the business in 2020, 2021. So we can only really compare to 2019. When we compare to 2019, you'll see this business is nowhere near in the same place where it was 3 years ago. The revenue was up 50% now. The gross profit was up 47%. If you look at the gross profit after tax, that's up 68%. If you look at free cash flow, that was up 142%. So the revenue is way ahead of where it was prior to 2019. The profit is way up on what it was in 2019. And you can see here what is also impressive is the dividend as well. They did hike up their interim dividend. They also did increase their final ordinary dividend by a lot. And they also actually paid a special dividend out this year as well. So that means its total dividend per share is actually 14 pence overall. And you'll see compared to the last time we talked about this, I mean, it trades at 10 times earnings, which I think is absolutely insane for this business. I think this is one of the premium UK companies, one of the best run UK companies out there. I think we should be talking about a company that's trading at 20 times earnings. So, you know, you're talking a double up over there already. But that's a subject for later on. You'll see right here that it's now updated its dividend yield to 4.8%. I mean, you're getting this business already at 10 times earnings with a really good performance financially and history wise, and you know, you're picking up a 4.8% dividend, and if you include the special dividend, it's a 6% yield. So that's absolutely insane. You know, if you talk about the S&P's average return is 9% a year, all you need here is Hollywood Bowl to keep paying that special dividend out, and you only need to get 2% return on the share price every year to kind of match the historic average of the S&P 500, which is just absolutely crazy. But going back onto the accounts, you can see here, you know, revenue up, profit up, dividend as well, higher than where it was in 2019. They also opened up 3 new centres, which was Belfast, Birmingham, and they also have the mini golf brand now, Puttstars, which was in Harrow. There also is 2 additional centres that are going to be open up in H1 financial year 23. Also, the big thing is that we know Hollywood Bowl made an acquisition. They made an acquisition and they're going from a UK bowling company, Hollywood Bowl, and the Puttstars company, now to moving into a international business and moving into Canada. They think that the Canada market is fragmented and there's not a market leader in the bowling space. They're hoping to be that market leader in the bowling space in Canada, and we know they made an acquisition to move into Canada. This is the big part to be looking into, or what's going to be the growth driver for Hollywood Bowl in the next 3, 4, 5 years. You see here there's a further 10 centres at least targeted for opening before the end of financial year 2025. That's going to be the growth drivers, and you'll see here that actually since they made the acquisition, which I thought was really impressive, is since they made the acquisition in Canada for the bowling alleys, you can see here for the 4 months post acquisition, like-for-like revenue grew by more than 20%, with total revenue of 6.2 million and an EBITDA of 1 million as well. First new centre acquisitions completed in Kingston, Ontario, and the Splitsville brand acquisition pipeline continues to build. First refurbishment expected to complete in H1 financial year 2023. An opportunity to add up to 10 centres over the next 5 years, with the potential of at least a further 20 sites over the next 10 years. So the big growth driver for Hollywood Bowl going forward is going to be this Canadian expansion. We know the UK is kind of getting to the saturation point of view, where I still think there's plenty of expansion for them, but what's going to be the real growth driver and profit driver for Hollywood Bowl in the next few years is becoming a market leader in Canada, if they can do that, and that's what's is important to focus on going forward. Now, they did mention the outlook really quickly. They said that strong trading momentum at the start of financial year 2023 with encouraging pre-bookings for the Christmas period, so that's really good. They also said that the UK electricity usage costs are hedged until financial year 2024, and they're also installing a lot of solar panels as well on their venues at the moment, which obviously should help them by the time this hedged energy costs run out in 2024, or hopefully by then we've seen the problem calm down. And also it said that over 74% of revenues are not subject to inflation in cost of goods sold, which is obviously fantastic as well. And you can see here a previous chart of the historic improvement of revenue and profit, and then the massive explosion that they have had now with profit nearly double what it was in 2019. Revenue isn't only the same, but it's massively higher as well. Now, analysts are expecting a little bit of slowdown next year. Obviously, that's going to do with some of the inflationary pressures coming in, the recession kind of fears. You've also got the benefits and tax reliefs that they've also had come off. I do think analysts are a little bit lowballing here, like they did previously, and obviously Hollywood Bowl blow them out of the water, but there was no mention of this in Hollywood Bowl recent quarter or financial results, so we'll see what commentary it has on there going forward. But I would expect Hollywood Bowl to still increase that revenue and profit further down the line going forward, even if it has a bit of a slowy down year. I don't think it should be this aggressive, so we'll see what happens there. But financial health wise, you'll be able to see that the balance sheet is obviously still fantastic here. The debt that they did have has been totally paid off, and they're also sitting on 56 million in cash, so a 406 million company with that amount of cash is obviously really healthy. And when you look at the ownership point of view, there was a lot of insiders buying recently, but it has slowed down a little bit over the last few months, but there's no insiders selling, which is obviously really positive. So you can see here from what I showed you that, in my opinion, Hollywood Bowl is a far better business where it was in 2019 and should be valued a lot higher, especially as well when you look at the valuation at 10 times earnings. I think this is one of the best UK run companies out there on the UK market, and I think that it should be a lot higher as well. Even when you think about if there's going to be a drop off of profit in the coming year, I still think when you look at that point of view, it's still a very cheap valuation. And you've also got in a very tasty dividend there, which could be either around 4%, or if you include this special dividend, could be up to 6%. And also when you look at the pipeline going forward of the Canada expansion, if that is successful going forward as well, that's obviously going to be clear profit and revenue drivers in the next few years. And the company should carry on doing very well. So yeah, overall, one of the best performing stocks for me that I hold, and I think it's one of the best UK UK stocks out there still at the moment. So yeah, big fan of this one, and well done to Hollywood Bowl for executing so well this year. And hopefully it's had a bit, in the last few months, it's had a bit of a fairer reflection on the share price, but hopefully going forward in the next 12-24 months we see that carry on improving, because I think still at these sort of levels this is a company that should have a better premium on this business. So hope you enjoyed it. Well done to you guys that hold Hollywood Bowl shares as well for the last few years. Obviously you guys have done really well as well, and yeah, thanks for watching, and smash that like button.